Your strategy is not broken. In fact, your strategy might be completely fine, but you're still losing money. And the worst part? You already know this. You've backtested it, you've watched it work, you've seen other traders profit with the exact same setup, but when you trade it, something goes wrong. By the end of this video, you'll understand the real reason this keeps happening. Not the surface reason, the deep one, the one no indicator can fix. And once you see it, you can't unsee it. Here's the thing most trading courses won't tell you. A strategy gives you an edge. That means if you take 100 trades, you make more than you lose. But here's what nobody says out loud. An edge only works if you take every single trade. The moment you start skipping trades or moving your stop loss or closing early because you're scared, the edge disappears completely. You didn't lose because of the market. You lost because of what happened between your ears. Now here's something that will sound strange at first, but stay with me. The problem isn't that you're emotional. The problem is that you don't know why you're emotional. And there's a specific reason for that. We'll get to it in a moment. There's something that happens in your brain the second you put real money on a trade. Scientists have a name for it. Traders almost never talk about it, and it explains why smart, disciplined people turn into completely different traders the moment their position goes live. We're going to call it the invisible switch. I'll show you exactly what it is in a few minutes, but first, let me tell you about a trader named Marcus. Marcus had been trading for 2 years. He wasn't a beginner, he'd done the work. He traded breakouts on the 1-hour chart. He had rules, a journal, a risk plan. He even paid for a $500 course that taught him the exact strategy. On paper, it worked. In backtesting, it returned 22% over 6 months, but his real account, down 18% 1 month, down 11% the next. He started posting in trading forums. People told him to just be disciplined. He'd heard that 100 times. It wasn't helping. So he started recording every trade, not just the entry and exit, but what he was thinking, what he was feeling, before, during, and after. What he found was this: he wasn't losing on bad setups, he was losing on good ones. Here's what was happening. When a trade went against him by 30 pips, his body started reacting. His heart rate went up, he felt hot, his hand moved toward the mouse, and before he could think clearly, he'd already closed the trade, at a loss. Then the trade reversed and it hit his original target. He would have won if he'd just stayed, but he didn't. And the next week, the same thing happened, and the week after that. So what was going on with Marcus? Here's the truth. When you put real money on a trade, your brain does not treat it as a business decision. It treats it as a threat to your survival. Your brain doesn't know the difference between a 50-pip drawdown and almost getting into a car accident on the freeway. Same signal, same chemical response, same panic. Danger, do something, now. And in that moment, your logical brain, the part that remembers your strategy, gets shut down. Not slowed down, shut down. This is the invisible switch. The second real money is at risk, the switch flips, and you stop trading your strategy, you start trading your fear. That's what was happening to Marcus, and that's what's happening to you. Now, here's where it gets really interesting. There's a way to train yourself to keep the switch from flipping. Most people try to do it with motivation, with discipline, with rules, but there's one method that actually works, and almost no one talks about it. It doesn't involve your strategy at all, and it doesn't require you to be a robot with zero emotions. We'll get there, but first, let's talk about why the usual advice makes things worse. You've heard it 100 times. Just follow your rules. Don't trade emotionally. Be disciplined. Here's the problem with that advice. Telling yourself not to be emotional while a trade is live is like telling yourself not to think about a pink elephant. You're thinking about it right now, aren't you? The moment you try to suppress a feeling, your brain focuses on it harder. So when traders tell themselves, don't be scared, the fear gets louder. When they say, don't move the stop, their hand moves toward the mouse anyway. The advice isn't wrong, the timing is. You can't fix emotional trading in the middle of a trade. That battle has to be won before you open the position. The real work happens before the trade. Let me explain. What actually works is something called pre-trade conditioning. Think of it like this. Soldiers don't learn to stay calm under fire during a gunfight. They train for it every single day before they ever step onto a battlefield. By the time real danger hits, their body already knows what to do. Traders need the same thing. Here's how it works in 3 steps. Step 1. Risk only what feels boring. Most traders risk too much per trade, not because they're greedy, because they think 1% is too small to matter. But when you risk more than your brain can handle emotionally, the switch flips. Drop your position size until losing a trade feels like spending coffee. Frustrating for a second, gone by lunch. For most retail traders, that means risking between $20 and $50 per trade max until your win rate is proven over at least 50 live trades. If a single loss ruins your day, you're trading too big, period. Step 2. Write the trade before you take it. Before you click buy or sell, write down 3 things. 1. Why you're taking this trade. 2. Where your stop is and why. 3. What you will do if price goes against you before the stop hits. That last one is the most important. Most traders haven't thought about it, so when it happens, they panic. When you've already decided what you'll do, your brain stops treating it as a surprise. The switch doesn't flip as hard. Step 3. Review, don't replay. After each trade, don't replay the outcome emotionally. Look at the data. Did you follow your rules? Yes or no? That's the only question that matters. A loss where you followed your rules is a win. A win where you broke your rules is a problem. Over time, your brain starts to understand. The goal is execution, not profit. And when execution becomes the goal, the fear starts to fade. Marcus did this for 60 days. He didn't touch his strategy. He started journaling every trade. He dropped his risk to $25 a trade, which felt embarrassing at first, but something changed around day 40. He stopped checking his P&L mid-trade. He stopped moving his stops. He started trusting the process. And in month 3, he had his first profitable month since he started trading. Same strategy, different trader. So I promised you the one method that actually works. Here it is. It's called process journaling. Not just writing down your trades, but writing down what you were thinking and feeling at every stage of the trade, before, during, and after. When you do this for 30 days, you start to see your own patterns. You'll notice, I always close early when the trade goes 20 pips against me, or I always overtrade on Mondays after a losing Friday. You can't fix a pattern you can't see. The journal makes the invisible visible. Your strategy was never the problem. It was always you. Not because you're broken, but because nobody taught you how to manage your own brain in a live trade. Now you know. Most people watch a video like this, nod their head, and go right back to overtrading by Monday morning. Don't be that person. Pick one thing from this video, just one. Start with the position size. Trade it for 30 days before you change anything else. And if you want to go deeper on trading psychology, I've got another video right here that breaks down how your past losses are affecting every trade you're taking right now. See you there.